Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Boothra, and these are the top stories that we're tracking at 1:30 p.m. this Friday. Indices off session highs after solid gains in early trade. The mid-caps outperform.
Rail industry slumps after its subsidiary shuts its unit in Europe following the energy crisis. The company is also developing contingency plans as it anticipates potential gas shortage in winter months in Europe.
PNC Infra gets a fillip on a concession agreement for a national highway project worth nearly 1,400 crore rupees in Uttar Pradesh.
Multiplex stocks take a beating on poor collections of big-ticket Bollywood release Brahmastra on the first day. Analysts do not expect a turnaround in box office numbers anytime soon.
Well, let's just do a quick check on the markets. We have slipped from the top of the trading session. At one point of time, the markets were up close to about 1.5%. So from the day's high, we have seen a fall, and the fall has been steady over the last 2 hours. That said, we're still holding up with gains of close to about 1% on the benchmark indices. For the entire week, we are likely to go home with gains of 1.5% on the Nifty and the Sensex, while the mid-caps are up close to about 1.8%. For the day, the mid-cap index is a bit of an underperformer. The mid-cap index is a gain of just about 0.4%, and the advanced decline ratio is in favor of the losing side. But we've got a management waiting by.
Oh, yes, we do. So we will now be joined by Dr. B.S. Ajay Kumar, who's the Chairman and CEO of Healthcare Global Enterprises, to discuss the business outlook and what's happening in the sector as a whole. Sir, Dr. Ajay Kumar, thanks a lot for joining us and speaking with us today. Well, Q1 was really strong for the sector, for your company as well. Can you give us a sense of what the occupancy levels are right now in Q2 so far, and how much of the international medical tourism has come back?
Regarding the occupancy, we are doing extremely well. We are up to the mid-60s now. And again, when you look at oncology, which is a lot of it is outpatient, we also measure footfall, and that has also increased. In fact, we are better than the pre-COVID level. The things are definitely moving in the right direction for us. Regarding the international, we are considered a destination. So our international footfall has significantly increased post-COVID era. And we are seeing a significant footfall from parts of Africa, Middle East, and we will continue to see this increase as we go forward.
If you can give us the number, how much, you said mid-60s, 64.6% was the occupancy in Q1. Has that continued? Is that stable? Yeah. And if you say international tourism has picked up versus pre-COVID levels, is it higher? Is it stable?
It is actually higher than the pre-COVID level. And, for example, in our Bangalore, it used to be 15-16% of our revenue. Now it is climbing close to 20% of our revenue, which is significant growth in Bangalore. And we also see the footfall increasing in our center in Mumbai as well as in Kolkata. And Ahmedabad also is picking up for international.
What are the numbers for Ahmedabad?
No, Ahmedabad is still significant. It's not that high. It is only like about 2-3%.
Okay.
But from very low level, we are increasing, and we are putting a lot of efforts to increase even in Ahmedabad, particularly coming from regions like East Africa. We are seeing a significant increase in the footfall.
Okay. So just one more question on occupancy before we move on. Q1 occupancies were also at 65%, 64.8%. The current in July, August, or the current month, you're also saying that occupancies are at similar levels. But your aspiration is that occupancies will hit 80%. Can you walk us through the glide path of how occupancies will hit that 80%? What is it that you anticipate and when?
Yeah. See, one of the things we look in oncology is as the occupancy rate increases, the footfall has to increase significantly. Our new patient registrations overall has increased. For example, throughout India, what we were at 100,000, we are reaching 125,000 new patients in oncology. And also recurrent patients are about 35 to 40% increase. So with this kind of increase happening, and when we look at what was our occupancy last year, even pre-COVID era, we were around 48-49%. From 48-49%, we have gone to 65%. So we believe this trend will continue forward. And with this, and also our new centers becoming mature centers, naturally the occupancy is going to increase. With these factors coming in, we expect the occupancy move towards more like 70%. It may take us a couple of years to move to 75, 80, but one of the things we have to be always cautious in occupancy is more and more patients are moving towards outpatient and ALOS is becoming less and less. Keeping that in mind, our focus, we believe, should be more on the footfall in the outpatient.
Yeah, so that is about occupancies and footfalls as well. But in terms of average revenue per bed, you saw an increase of 6% in the quarter gone by to 38,454. Just explain to us what is the difference between the average revenue per bed in Tier 1 and Tier 2 cities, and is this something that can increase this particular number in, say, coming quarters?
Yeah, particularly in our center of excellence and our focus groups, the hub centers like in Bangalore, Mumbai, and Ahmedabad, Kolkata, definitely the RPOP is going to increase. Whereas always it has been a trend where the secondary cities like in Tier 2, Tier 3 cities, which will follow over a period of time. But there is definitely a lag. But our average in the big cities are going to increase because of the high technology and the mix we are going to see there. For example, new technology we bring, obviously the cost is going to increase. This is why we are seeing the difference. But we are also putting high technology in Tier 2, Tier 3 cities, and our recovery has been fairly good. So we see this also increasing in Tier 2 compared to 2 years ago and 3 years ago. So general trend has been improvement in it.
What is the number? If you can tell us what is the average revenue in Tier 2 cities and Tier 1? Yes, you're expecting the Tier 1 part to increase, but generally if you can give us a sense?
I think, RPOP has been around 30,000. And, in the main cities, it is over 60,000. So I think this is going to definitely keep increasing, particularly, in my view, the big cities, we are going to see more RPOP. And because in the Tier 2, Tier 3 cities, we also do, the scheme patients coming in through that. Because of that, naturally, the RPOP may not increase significantly.
Okay.
So,
and one of the things we are also seeing now is the post-COVID, the private insurance is increasing. If the private insurance now penetrates and cash paying become less, that also is going to contribute to better RPOP as we move forward, particularly in Tier 2 cities.
So taking all this into account, the expected improvement in the metro cities, average revenue per occupied bed, the use of technology, the mix that you have between Tier 1 as well as Tier 2, private insurance kicking in, schemes, etc. that you offer. Your RPOP last quarter was about 38,500. What can that number increase to?
When you look at the mix, in my view, that number normally, we look at it years down the road. But looking at the previous trend and now, it can certainly increase to 45 to 50,000 in the next quarter. And we hope the way we are positioned.
Next quarter?
No, next fiscal year.
So FY24, our POP can be 45 to 50,000?
Around 45 it can increase.
Okay.
That's a sharp increase,
because what is happening is our new centers are becoming mature.
Correct.
Now, naturally, we expect them to deliver better RPOP, overall combined RPOP.
Okay. Sir, can you give us a sense of your fertility segment, that is Milan? Are you expecting any further increase? It's just 5 to 6% of your overall revenues. Can you scale it up? Any divestment plans here? What is the outlook?
Initially, we were thinking of diversing and we had made some announcement, but now we're looking at, really looking at a focused approach on that. We have put together a strong team and we are developing it in a bigger way. So we do believe there is a definite focused factory approach needed for Milan. Infertility is a growing business. So with the focus we are doing, we next 2 years, we see significant upside. I obviously, at this point, I'm unable to give any numbers, but a lot of effort have been put now to increase the overall footfall, overall what we call as the fertility cycles. That is showing a good trend in the last 2 quarters. So we hope this will continue to improve. Of course, there are, as we know from COVID period, we kind of took a backseat because nobody came for fertility in the COVID time because of the shutdown, but things are definitely improving.
Dr. Ajay Kumar, this has been a great conversation. Thank you very much. for joining in. That's Healthcare Global for you, talking about how occupancies are likely to trend, the average revenue per occupied bed, their plans with respect to their fertility business as well. Get into a break on that note. On the other side, we'll get you some analysis on the rising gas prices in Europe and its implication on the Indian and global economy. Sonal Bhutra will fill us in with more. Welcome back. Rain Industries today announced a temporary shutdown of its unit in Europe on the back of energy-related crisis. The company said they're also looking at contingency plan for other European units in anticipation of a natural gas storage and price spikes. The sharp spike in European energy prices continues to have a bigger impact across sectors. My colleague Sonal is at the big wall, and she's going to explain how the increase in gas prices in Europe have led to production cuts for energy-intensive chemical companies in the region and the possible impact on Indian companies.
Well, we have been talking about how increased gas prices in Europe ad nauseum, and while the situation continues to be grave, it has started having a larger impact now. Cut in Russian gas supplies have resulted in sharp jump in electricity costs in Europe, and this has impacted production of energy-intensive chemicals like ammonia, caprolactam, methanol, melamine, etc. And in some cases, production has been cut by more than 50%. BASF, in its second half outlook for this year, did indicate that risk could arise due to gas shortage in Europe, and this shortage will be compensated by higher plant capacity utilization at sites outside of Europe. And as per a report by Bloomberg, CRU Group estimates that Europe now has lost half of its ammonia capacity and 33% of nitrogen fertilizer operation. Now, that's a big number, considering that Europe contributes roughly 20% to total global ammonia production. So let's focus on ammonia then. To produce 1 ton of ammonia, around 36 MMBTU of natural gas is consumed. And every $1 per MMBTU increase in gas price would mean that ammonia's variable cost will increase by $36 per ton. So with gas prices increasing by say $50 to $70 per MMBTU in Europe, variable costs of ammonia production have increased by $1,500 to $1,800 per ton. And this is the way where gas prices are higher, and the price of ammonia production is already doubled in last 1 year to around $1,300 per ton. And that's a sticky situation to be in because price is lower than the cost of production. Now, in Indian context, companies like GNFC, RCF are some of the producers of ammonia. But it does not stop here. Ammonia is used to produce nitric acid, ammonium nitride. And due to higher cost of production of nitric acid, it has increased by $200 per ton to around $600 to $800 per ton. Aarti Industries uses nitric acid as raw material, and to shield themselves, they did announce setting up a nitric acid plant. In terms of producers, Deepak Fertilizers, GSFC, GNFC are the nitric acid producers in the country. Industry sources are also suggesting that other chemical plants like melamine, caprolactam, methanol are also running at lower capacity in Europe. Now, this has been confirmed by some of the Indian chemical players as well. Megmani Finechem told us that caustic soda prices are expected to stay at higher levels due to energy prices in Europe. Aarti Industries said that Indian chemical players are benefiting due to production issues in Europe, and that is something that could be the big theme. Remember, Morgan Stanley did indicate in July that since European peers are facing challenges with respect to gas costs, this could benefit Asian and particularly Indian chemical players, which are well positioned to take market share. Whether Indian chemical players will grab this opportunity or not, well, time will tell.
Thank you very much, Sonal, for highlighting that. Very interesting. Let's slip into a break on that note. Before that, here's a quick reminder for our viewers. Money Control Pro's Financial Freedom offer is back with added benefits. To get a Money Control Pro subscription at a net zero cost by claiming exciting offers worth 1,500 rupees from our partner brands. Grab the benefits now on the Money Control app or website.
Hi, welcome back. You're still tuned into Midcap Radar on CNBC-TV18. Well, the Midcap Index, that one is doing well. It's up 144 points as we speak, and there's some buying from the lows as far as the benchmarks are concerned as well. So for now, Nifty is sitting with gains of 45 points. So a couple of these stocks which are pushing the Nifty higher. We have something like a Tech Mahindra which is doing well. Also, IndusInd Bank, Infosys. So the IT space is really something that has picked up pace, and those stocks are at the day's high as we speak. So that's something that is aiding the Nifty moves as well. But let's move on and talk about what's happening in the CCI space. They have begun investigation into allegations of cartelization by steel companies. Timsi Jaipura is joining us with more details on the same. Timsi.
Well, that's right. What sources are telling us is that the Competition Commission of India has started investigations into allegations of cartelization by steel companies. The companies that are under CCI scanner include Tata Steel, JSW, SAIL, Vizag Steel, Tirumala TMT, Kamachi TMT, and many others. And also important here that CCI has started investigations based on a plea filed in the Madras High Court. The plea was filed by Coimbatore Cooperation Contracts Welfare Association, who had approached Madras High Court seeking a CBI probe, and then CBI forwarded the complaint to DG Investigation CCI for a detailed investigation, since these are matters of cartelization and CBI wanted CCI, which is the appropriate body, to look into the allegations. Remember, association had alleged that steel companies have acted as a cartel and hiked prices together. Comments are awaited. Meanwhile, CNBC TV18, since it has reached out to Tata Steel and JSW. But let's see what happens finally once the investigations begin. Back to you.
Timsi, thank you so much for joining us with all those details. When one stock in the broader markets which is doing well is Tanla Platforms. It's the second day of consecutive buying that we are seeing in the stock, right? Up 5%. What is happening here?
Well, a 5% upper circuit today, a 5% upper circuit yesterday, and this follows the announcement by the company about a buyback. The company announced a 170 crore tender buyback at a price of 1,200 rupees per share, which means that even after the 10% up move over the last 2 days, the price of 1,200 rupees per share is at a premium of 37% to the current market price, and the company will be buying back about a 1% equity. The promoters have indicated they will not be participating in the buyback, and their holding currently stands at close to about 44%, which means the actual acceptance ratio will be a lot higher. Now, the cash on the books is nearly 1,000 crores, 987 crore. So in comparison, the buyback, size of 170 crore could be about 15-16% of its overall cash. But remember, the company's stated policy is that they will also be giving back 30% of its free cash flow via dividends on an annual basis. So, which perhaps explains why the buyback size is only about 16-17% of its overall, size. The stock is up 10% in the last 2 days, but bear in mind, it's still down 58% from its 52-week high.
Okay, so that's about Tanla Platforms. Moving on to our segment Midcap Spotlight. Today, Vaishya is focusing on multiplex stocks that are reacting to poor content show of today's movie release Brahmastra. Vaishya, what are you picking up?
Hi Sonal. Well, the multiplex stocks have had a weak show today on poor content of Brahmastra. Now remember, this movie had a big hope for the film exhibition business as a whole, as Q2 has been relatively soft. This is even after having the releases of some big movies like Liger, Lal Singh Chadda, Shabash Mittu, etc. Now the July box office collections came in weak at 270 crores, while August was even weaker at 142 crores. Now remember, a big movie like Amir Khan would have easily clocked even 100 crores, but did not manage to do just about 50 crores. Now, with the weak reviews for Brahmastra on the very first day of its release could possibly mean that September may not bring in much cheer for the film exhibition business as a whole, and the industry has had a weak start to H2 of FY23. Now, Elara Capital had expected the box office collections to grow 4% in FY23 versus the pre-COVID levels. This is after incorporating a weak Q2 of FY23. Remember, Brahmastra advance bookings were also very strong actually. So, a big reversal in PVR and Inox performance is likely only once the box office scripts a turnaround in future. Now, in terms of some big movie lineups, for September, we primarily have The Woman King and Vikram Vedha. But Vikram Vedha is expected to be releasing on the 30th of September, which is the end of the month, and hence the collections would flow in October, which is Q3 and not Q2. So hence, in terms of content lineup, we do not have much for Q2, which is for the last month of this quarter. Let's see what the brokerages have to say. The average target price for PVR is at approximately 2,300, while for Inox it is at 650. In terms of valuations, PVR is at approximately 60 times P for FY23 and Inox is at 35 times. Now for PVR and Inox, the only possible trigger in future could be the NCLT approval for their merger.
Vaishya, thank you very much for that. The stocks are sulking today, PVR and Inox getting a bit punished after some of the reviews for Brahmastra have been a bit poor or negative, so which is why the street is worried that it may not be able to revive the sinking hopes of Bollywood. But with that, we're out of time on Midcap Radar. Your stocks when we return.